Welcome to All That Matters, a show about what's really worth your attention in the markets and economy today. Join hosts Michael Antonelli and Ross Mayfield as they tackle the latest headlines and answer real questions from clients.
Welcome to All That Matters with Mike and Ross. Mike, you got a lot to talk about today. But before we dig in, I couldn't help but notice you got a bit of a different background here. I think maybe I can see some waves in the reflection of those mirrors. What's going on? Where are you at?
Yeah, I'm not in my home in Milwaukee. I'm on the road. You and I travel a lot, talk to clients. I'm down in Sarasota, Florida. We have a great event coming up on Friday for a bunch of really, really great clients. But I didn't want to wait till I get back to talk about some of the things that we're seeing because I know there's a lot going on. Everybody's got a lot of questions. We're getting a lot of questions. So I had to do this on the road. I got my laptop. I'm ready to go here, Ross.
Yeah, we appreciate you. Market strategy never sleeps on the air, in the road, by the beach. So we do. We have a lot to talk about. It's been a very noisy, couple of weeks. New administration, new year. I think that's bound to happen. But I want to talk about kind of the existential question, right? Which is how to stay the course, how to maintain a plan when things feel so noisy, when there's so much being thrown out that's new or different. And I do want to start with one thing that I've heard you talk about a lot, and it's a principle that I've kind of taken from your work, which is the big things that tend to matter, that tend to pose existential risk to our clients' portfolios, to their goals, are the things that come out of nowhere, right? So if something is being talked about ad nauseum, if we're debating it on every news channel, if it's in every publication, it matters on the margins, and it could matter, it could send the market into a correction. It could matter for a company's earnings. But it's not the existential risk that we tend to think about as like really important, like a COVID, like a 9/11, like a great financial crisis. And so that's something to keep in mind as you're, I think, being bombarded with a lot of stuff these days. Is that a fair take on this current environment?
It is. It's something I talk to clients all the time about the stock market. Remember, the stock market has something called expectations. It's just another way to say, is the market thinking about this thing? Okay. And the market's always thinking about the national debt and the dollar and earnings, and it's always thinking about it. So if it's always thinking about something, will it have a dramatic impact on the market? No, because the things that have a dramatic impact are surprises like COVID or 9/11 or the 07 housing crisis. A couple weeks ago, there was this announcement of a Chinese AI bot that was like made for $1 million, and it was gonna like reshape the way big tech companies were investing. It came out of nowhere. Nobody was talking about it. It came out of nowhere. There were no expectations about it. So that's what really, really matters. So one of the things that we're seeing right now is this kind of tariff talk, Ross. We've seen lots of tariff talk, China, Mexico, Canada, and the market's coming to grips with it. Does the market have expectations about tariffs? Yes, because it knows that President Trump likes to use tariffs and talk about tariffs. But when surprises happen, like, oh, I'm going to tariff them tomorrow for 50%, right? When a surprise happens, the market has to react. It has to rethink, and that's what we saw happen. It reminds me a lot about what's important for you, and that's dealing with uncertainty, managing uncertainty. And Ross, I got a good example of this. There's a Super Bowl coming up. Who you got, Ross? You want to take a stab? Or?
Oh boy, you're betting against Mahomes, not me.
Yeah, not me. I don't either. Yeah, either team could win. But think about it. Two teams, okay? They're going to play a Super Bowl. There's a lot of uncertainty, right? Who's going to rush? Who's going to pass? What's going to happen? There's a ton of uncertainty, right? But what do they do to solve that? They game plan. They go back to their respective offices and say, here's our game plan. Here's what we're going to do. And along the way, as things change, we will manage our game plan. It's the same thing for you in the markets. It's the same. Tariffs, trade, taxes, all this stuff. You have to have a game plan going in. These are my investments. This is my plan. This is what I'm going to do. And I will adapt along the way. But remember, if you adapt to news along the way, the news changes really rapidly. What if you go into your advisor's office and you say, oh, I want to protect my money. These tariffs sound really bad. Okay, I want to protect my money. And then a week later, all the tariffs are wiped out. And then the stock market recovers. What are you going to do then? So try not to overreact. Have a game plan and learn to manage your uncertainty. Ross, I think that's super, super important. And let me just, before you kick off, I want to say this. People often look to us for answers about this kind of stuff. Jerome Powell, I got my phone here. Jerome Powell, who's the Fed chair, said this the other day. We don't know what will happen with tariffs, with immigration, with fiscal policy, with regulatory policy. That's one of the smartest people in the world said we don't know what's going to happen, but they game plan.
Yeah, that's a bit of shocking honesty from one of the most informed people on the planet. Yeah, I think you're right. When things are overwhelming, return to core principles, control what you can control, and you just hit a lot of those. I do think that in today's environment, it is as important as ever to kind of control your media diet, your intake. We're not anti-news, but I do think that there can be too much, right?
Yeah.
This great tech analyst, Matthew Ball, he put out a big report on video gaming. So not super relevant here, but he presented a chart that showed the growth in daily use of TikTok, Facebook, YouTube, and Instagram among US adults. So kind of the big four social media, from roughly 275 million hours in 2019 to 425 million hours in 2024. So that's like a 50% jump. Yeah. Obviously the population hasn't grown by that much. So it's people just filling their days with more and more of this stuff, flooding the zone, and maybe in an attempt to become more informed, really rendering it impossible to separate news from noise, right? You're just kind of overloaded. There's information overload. Our brains are not built to kind of handle that. So it's just something that we'll have to be aware of. There is a lot of noise out there. There always is, but it really feels like it today in this kind of internet age. So from something that's mostly noise to the kind of thesis of this show, which is we're going to talk about all that matters, what really matters to investing success. Mike, I know you have a topic that you're pretty passionate about, so I want to get you to kind of tee off on it here.
Yeah, and I'll be curious to hear what you think about this one too. So I often go on the road and people ask me, what am I worried about? And if you follow my work or you watch us here, you'll know that I'm an optimist. I think things get slowly better over time. And I think I've been right about that. But they ask me, what am I worried about, right? And I do think there's something that's happening in society, American society in particular, that's having an effect on not only people, but investing in general. And that is kind of online gambling, the kind of pervasive growth of online gambling. And we've kind of deregulated it. There's the public companies like the DraftKings and all those kind of public online gambling companies. I think it's changing the way people view risk and by effect the market. And that's, you can go online and see people do a parlay. What's a parlay? A parlay is like you make 5 bets and you put like $100 down. And if you hit all 5 bets, it turns into like 1,000. But it's a long shot, right? Getting 5 bets in a row is very, very difficult. So, but people see other individuals succeeding at it, and they're like, "Oh, I should be doing that. Wow, they just turned 100 into 1,000. Why am I not doing that?" So it's changing the way people view risk. Then you see meme coins and crypto, and you see they're up like 100,000% in a week, and you're like, "Why am I not doing that? What's happening over there?" I think this is changing the way people view risk in really negative ways, because we know that, investing is about this kind of slow accumulation. The market gets better, stocks, earnings all get better, but gambling can change people's brains. And I'm worried about it. I'm worried that it's going to affect our clients, and I don't want it to. I don't want our clients to be like, why am I not doing that, Ross? So of all the things that matter the most to me, one is protecting people from the really negative effects of things like gambling.
I think you've hit the nail on the head. I think my generation and a younger generation in particular are at risk of this sort of thing. I have a stat for you. FanDuel reported last year that 90% of their users have placed a same game parlay. And then the punchline, this trend benefits sportsbooks since parlays tend to have higher profit margins. That means that the sportsbooks are doing better. That means the bettors are doing worse, right? Yeah. And you hit on the thing that is really the kind of like hinge point, which is the mixing of gambling, investing, and social media, right? There's a survivorship bias when people post their big gains. Their big gain in a meme coin, their 15-leg same game parlay that turned $1 into $1 million. You're seeing those on social media, but what you're not seeing, people don't post their losses, right? There's no point. You don't post your losses. So you're only seeing the wins. And I think it skews people to think that it's more common than it is to win big in markets like this. And quite frankly, the investing apps and some of the players in the market space have gotten really good at taking principles from the gambling companies and instilling them into, market activity, right? Whether it's 0-day options or levered products or whatever, the idea that you can turn small amounts into big wins is something that's taken from the gambling world, right? It's a craps table. So I think it's particularly a big deal for my generation and younger generations. And the gamification of markets is, to me, one of the big existential risks. It's something that's completely in our control in theory, and yet it's proliferating at a pace that is kind of scary.
Yeah, I want everybody to understand that investing is about playing your own game. As much as it's interesting to look at other people's games from afar, be like, oh, what are they doing over there? What's happening over there? Who you are and the kind of person you have become determines what kind of investments you can hold, right? Nobody can hold 0-day options and like levered ETFs, and nobody wants 5-game parlays. If you just grew up with the stocks and bonds and you have this diversified portfolio, just try not to leave your gain for somebody else's. I think Morgan Housel said that. I think it's a really good insight, right? Try not to leave your gain for somebody else's. And then as I kind of wrap up, Ross, and I'll let you kick us out of here, just back to the notion of uncertainty, right? This notion that the world is noisy and scary and stuff like that. I think this is the best thing I ever heard about wealth managers, advisors, right? So think about a mountain guide, right? So a mountain guide, you hire a mountain guide, right, to help you climb a mountain. But the mountain guide's not selling you certainty along the way. He's not selling you what's going to happen along the way. What he's selling you on is he will be a manager of uncertainty. He or she will be a manager of uncertainty. So it's the same thing with financial advisors. They're managers of uncertainty. They're helping you through difficult moments, especially when they get noisy and tariffs and trade and all this stuff. So remember that, okay? Nobody's selling you certainty. We're selling managing your uncertainty. That's super important, Ross.
Yeah, I think that's exactly right. I don't have much to add. I kind of went in there because I think that's a really, really smart takeaway for people. I think if I can take it back to one thing, something we talked about a lot last year is just really focus on what you're invested in, right? Yeah. Companies that are trying to grow their earnings over time. That's not gambling, right? That's the difference between investing and gambling. And so I think that's really important to keep front of mind when you're flooded with noise, is that you're invested in companies who just want to grow their earnings more tomorrow than they had yesterday. So something to focus on. Lean on your advisor in times of uncertainty. Lean on us. Send us emails. Send us questions. Mike's on the road talking to clients. I'm on the road talking to clients. So we love to hear feedback from you all. Mike, thanks as always for the time. Thanks for hopping on from the beach. Hope you can take a dip later, but we'll talk again soon. Thanks, everybody.
See you, everybody.
Thanks for watching All That Matters. Opinions expressed in this episode belong solely to Mike and Ross and do not necessarily represent the opinions of Baird. This program is for informational purposes only and should not be relied upon for any investment decisions.